Hello and welcome to this special presentation titled Follow the Leaders. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I'm delighted to be your host for this presentation. Certainly the market has had a pretty good rally up off of the June 3rd low, but it's been a very selective rally in that the market has been focusing on a select few stocks. And so this presentation is going to be all about a couple of things. One, how to identify a focused market rally, and two, then how do I take advantage of that? What are a few techniques I can do in VectorVest to take advantage of the selected rally that we're in? First, I want to bring to your attention a wonderful article or views written by our founder, Dr. Bart DeLito, back on February 9th, 2018, titled Ignorance is Dangerous. Let's take a peek at that VectorVest views now. So I'll kick things off by going right up to the top to the Views tab, and you'll see that I've already taken the date calendar back to this specific date. If this is not an essay that you've ever read before, I would strongly encourage you to do so. There's just a tremendous amount of great information in here, all about the buy to sell ratio for the most part. And so we're going to key in on a couple of things. One, in that our historical data shows that when the BSR falls below 0.2, the market is very oversold and close to establishing a bottom, which we have seen in fact come to pass. And then a couple of other important sections here on both market rotation and focusing. And so we'll take all this information, key in on it on the current market rally that we're in. So let's take a peek. I'm going to go right up to the top to the timing tab. From the timing tab, select market timing graph. Once there, important to quickly note, market certainly had a pullback. We should all be well aware. Market hit a low on June 3rd and then started the rally that we find ourselves in today. So as the market was on retreat with the buy to sell ratio, first and foremost, it's important to see that the buy to sell ratio fell below that level of 0.2 to 0.18, and it was only a couple of days later that the market really began to take off, and the market's had quite a run over the past couple of weeks now. What's been interesting, and to best illustrate, I'm going to take off the RT and the MTI to see the buy to sell ratio more clearly down here at the bottom. The buy to sell ratio has yet to really kick into gear as we see in most robust, market rallies, where it'll aggressively start working its way back to and above 1. It's staying relatively low on the scale, and to me, since the market has climbed a good bit and the buy to sell ratio has stayed really low with its readings, that to me is a nice indication to us that it has been a selected rally or a focused rally. If we drag back and just sort of compare that to the prior market low, when we had this tremendous rally to kick off the year, starting late December of 18, we'll see that it did take the buy to sell ratio a little time before it started to blast. So there's still hope that, of course, this could happen here in the future. But because we're getting further and further away from that market low and the buy to sell ratio still has yet to kick into gear, I think we've got to go under the presumption that that may never occur. And so we need to go about being very select in the stocks that we pick until that does occur. Another way to observe the focusing action is to get a little bit more granular. And so to do that, I'm going to key in really on this date here of the movement from 611 to 612. As the market stopped rising and has really been moving sideways from that tipping point, if I come up to the top right here and go to add parameter, I'm going to add the buy sell hold percentage. And when I click that on the bottom, let me drag back here actually first, just so you can see it better visually. The red bars here on the bottom, BSH graph, represent the number of sells, the percentage. The yellow is holds, and the green is buys. And so we can get a sense of the recommendation profile and the changes in that profile throughout time. And I'm going to key in on specific day-over-day movement. So with that information behind us, I'm going to dial back in. In the essay, this is one of the things pointed out in terms of knowing when the market is starting to focus. That would be when we go from 611 to 612, and we're going to see both the buys and the sells percentages grow. You may have to probably only watch one at a time, so you might have to take my word for it here, but the numbers both climbed, and so that's indicative of the focusing action that we're seeing here, even very recently, that we can observe in VectorVest. And so with that information and knowing that the market so far has been focused and is continuing to exhibit signs and signals of that, what we need to do is react accordingly, and in VectorVest, find ways to find the stocks that are participating in the rally. And so that's what's coming next. Let's take a peek at how we're going to do that. What we want to do is go after the persistent climbers, the stocks that even when the market gets tough, they just continue to climb. And so there's a number of ways to get to those stocks. We're going to detail 3 of those ways for you today. We're going to look first and foremost at high comfort index stocks. There's no greater way or simpler way for that matter than to just find the stocks that have the best price growth persistence. Comfort index is on a 0 to 2 scale. Above 1, you have favorable price growth persistence, but the higher above 1 you go, the stronger and more favorable that price growth persistence really is. So we want to go after the highest CI ratings or comfort index ratings we can find. Number 2 is going to be detailing the Midas Touch. It's been a little while since we talked about Midas Touch, and that's going to go after persistence in a different way. It's going to be more of a shorter term, higher momentum play on the current stock market, but there are stocks exhibiting high momentum patterns right now. May surprise some of you. And then also consistent derby performers, and that might be eye-opening, I think, for the bulk of the people watching this presentation. So let's go in and take a look at these 3 different ways, but all useful ways to find some persistent climbers. All right, so I'm going to go right into VectorVest. First things first, and we're just going to keep it real simple. We're going to go right to the Viewers tab. On the Viewers tab, I'm going to go to Stock Viewer. Once in Stock Viewer, to find the persistent climbers, it's as quick and easy as coming right into Stock Viewer and sorting by CI. That's going to put the persistent climbers right at your fingertips. And so here we have some interesting stocks, that's to be sure. And again, what the sort is trying to accomplish is putting good, high-flying stocks right at your fingertips. So we can just quickly glance at some graphs, and then we'll see the importance of this in terms of performance here in just a second. All right, and so certainly the stock has a little bit of wiggle to it from time to time, but you can see it is persistently moving higher, and that's really the most important aspect of CI. So you do want to favor the smoother, the steadier price performance along the way, and you can simply scroll down through the list and eventually get to some stocks that have tremendous price growth persistence like we have here with Erie, and do that in a smooth and relatively orderly fashion. What's bonus is when we put on an indicator like earnings per share, because this is the engine that drives the bus. This is what can take a stock that's in these tremendous long-term upward price patterns and continue to have gas in the tank. In other words, VectorVest's earnings per share indicator is terrific because it's not just telling you what earnings are today and what they have been in the past. It's looking down the road. It's giving you a 12-month projection of where earnings is likely going to be a year from now. And if that forecasted EPS is continuing to rise, so too then should the stock price continue to rise in the future. And so when you have both factors working in your favor, you're really onto something, and you're really finding a stock that has a high propensity to continue to persistently rise after you buy it. Of course, we want to make sure the market is rising and the stock is rising when we initiate a purchase, particularly on a stock like Erie that's already had a terrific shorter term run here. I would only be looking at this one if it continues to hit a new high water mark as a solid entry that way, or perhaps give it some room to collect itself, start its upward trajectory again, and then consider an entry that way. But in any case, Erie is a great prospect because undoubtedly in the future there's a strong likelihood, for the reasons indicated here, that Erie continues on to higher and higher prices out into the future. And so this is what we mean in terms of high comfort index, but if we can also, as Patrick was indicating a couple weeks ago, really add in the safety element, it's going to give us these good EPS patterns down here at the bottom as well, and we can see some even better performance, higher number of winning positions and things of that nature. So let's give you some evidence of that. One way to do that, to take a peek and see, are these really the kinds of stocks that have been participating in this rally, is just run some quick tests and see for yourself, right? So I'm going to dial it back to when the market took off on June the 4th. We saw that on the timing graph earlier. When I do that, we're still sorted by CI. We still have some of the same stocks, but some stocks have changed. And what I can do, though, is come right to the top and quick test the top 10. When we do, we see some good performance. We have more stocks went up than went down. We have our winners strongly outpacing some of the stocks that did go down. And that's a good combination or a basket to be dealing with, because with some good money management, oftentimes we can even improve upon some of this result if this was stocks that we were trading. So it's not so much to say this is the percentages you should be sitting on, more so to say these are in fact the right kinds of stocks that are performing well in this current market that we're in, and would be good candidates even going in the future, particularly the ones that are doing what you want them to do and rising in price. Now, talked about Patrick's presentation earlier. I think now is a very appropriate time to tie both of our presentations together. I'm going to sort by RS times CI. All right, and now we have a different list here again. And so now we're tying in that higher safety rating with the higher comfort index or price growth persistence rating, and we're lining our pockets with the safety and comfort as Patrick suggested a couple of weeks ago. So I'm just going to take a second to stress the importance of watching these presentations, because it really could have led to some gold, as you'll see here in a second. As the market blasted off, if we considered buying those kinds of stocks, what we'll see is that did, in fact, make a big difference in performance. The one thing I see for sure is it knocked a couple of those losers off the list. And so having the higher safety ratings, having the stronger earnings track records and performance, as indicated on both the charts and now in the testing, all of that should resoundingly say that's a great way to go to find some good, strong, persistent climbers for the kind of market that we find ourselves in here today. Now there's another list in VectorVest, so we're going to switch tactics here. That is, we're really favoring the longer term information, longer term price performance, longer term earnings performance, and parlaying that into some good investing opportunities. We're going to switch it up and go more high momentum. So I'm going to come over here to the watch list section, and in cherry picking, we have a wonderful watch list called Midas Touch Stocks. Midas Touch Stocks are also all about persistently climbing, but it's just over the shorter term. And so we're really favoring strong momentum movement over the last 3 months of trading, more specifically. Let's go take a look at some of the charts that we're going to find in here. Look who's right at the top, Old Erie. So seeing him a couple of times already, that must mean we're on to something, as both forms of analysis are finding some of the same stocks. There's some overlap here. So I'm going to go to View Stock Graph. And yeah, so I'm going to switch the layout here, because as we make this transition, I think it's important that I frame out for you what a Midas Touch stock is. Some of you might be thinking, what is he talking about? So with Midas Touch, we actually had a layout that we still use to this day that times gold, called the Midas Touch. What some of our subscribers ran across was this is a good layout to use to pick winning positions and on the stock level. And what they did is change it up and cater it to stocks by shortening the look back period to 3 months. What's on the layout is the thing I'll cover next. So we're going to look at a 3-month time frame, and then what we're going to be looking at are the 3 indicators I'm going to mention now. A 10-period moving average on stop, STOP, a 65, and a 40 on relative timing, RT. So we want all three of those indicators to be hitting new 3-month highs. Each of those are happening for cash right now. We also want relative timing. One small caveat, it has to be above 1, the 40 average. So 3-month high, all three indicators, and RT must be above 1 to qualify. So that's how the stocks get on the list. So that's where the high momentum over the shorter time frame comes into play. Now, as you can see, they've got, this one in particular has nice persistence over that 3-month period. It is truly a persistent high momentum climber. So that would be a good stock to take a peek at here in the near future should the market continue to rise. It's already doing what you want to do, and that's rise even when the market's gotten pretty tough. If I go down to the next one, here's Erie again. Nice shorter term outlook with stock price that we see there. A little bit of consolidation yesterday. It looks like some resumption just even a day later today. So a climb to a higher price might be a decent entry on Erie in the coming days. KMX, CarMax. Yeah, CarMax has been on a terrific little run here. And just going down this list, look at the beautiful climb in stock price over the last 3 months, even as the stock market did what? Experienced a, not a dramatic pullback, but a substantial pullback. These stocks weathered that storm like nobody's business and have just continued to climb. And so this is a great list of stocks to focus on in this current market should we, again, kick back into gear next week and start climbing on the market level. This will be a great list to use. So as evidence of that here again, if we had used it so far during this rally, or just to see, has this method truly been working if we would have picked stocks earlier on? Let me go ahead and quick test from the 4th. Yep, here again, nice performance, substantially outperforming the market in general. Lots more winners than losers, and not just 1 or 2 stocks, mind you. Pretty rock solid performance across the whole list. And so to me, that means this methodology is bearing a lot of fruit and is likely to continue to do so. All right, so another thing we can do is take this list. We know how these stocks are chosen now, but we can manipulate this list with another sort, realizing we still have that same good 3-month performance, and leverage an indicator like, say, CI. So now I'd have good longer-term charts and good shorter-term charts all in one. And if I quick test that, 5.6. So it does, in fact, take it to another level. And so that extra reassurance that the stocks have been performing over the longer term and now the shorter term as well has meant, that persistent climbing has equated to these are the kinds of stocks that people are favoring in this focused market rally. Right now, the other thing we could do, of course, is let's take a look at safety and comfort. And we'll quick test those. Different list here again. Yep. And look, no losers in the bunch. One's pretty close, but no losers in the bunch. All winners. That is something to still definitely spend a lot of time paying attention to, the RS times CI. All right, and now sort of the culmination, the final layer that I want to definitely shed some light on today is the VectorVest Derby. The Derby is a tremendous tool. This is an add-on product, okay? So it's not something that comes with your base subscription. You do have to have VectorVest real-time in order to run the Derby, and the Derby does come at an additional cost. However, it can be well worth the expense. Incidentally, there is going to be a trial, $29 trial for a month of real-time and Derby. There's going to be a link to that in the views this evening. So if this is going to be something of interest to you, certainly feel free to pick up that trial. And know that you're going to get a lot of coaching with it because it'll give you access to the daily trading room where myself and a few other of our top instructors are in that room every morning coaching people through the Derby and doing things like you're going to see here. What you're confronted with right out of the gate is going to be what the top performers are today. So one of the more common questions I've ever received at an event is, Steve, gee whiz, you guys have hundreds of strategies. Just tell me, man, which one's the holy grail? Well, it's kind of a loaded question because while I know that there are some strategies that perform better most times than not, there's never a guarantee. So there's nothing like knowing what strategies are often running and placing your bets accordingly. Now, on a day-to-day perspective, you can see a lot of turbulence in new strategies each and every day. So one of the things that we're doing in the Jockey Club now in our coaching is we're stressing not only the importance here, because there is some gold in this way here, but also the more persistent or consistent performers has shown a lot of fruit, bared a lot of fruit for us. And so what I'm going to do is illustrate that now. But each one of these green bars represents a search and unisearch. These are the 10 stocks. There's 10 stocks in each of the bars that represents that portfolio's performance, in this case for the day. Okay. Now when I go over here to the left and change it to, say, vary the start date, we can now start looking at a lot of data, and we can look for persistence. We can look for strategies that are not just making money today and get off to a good start that way, but we can look for strategies that have been doing it any day over the past 66 days, at least the best job possible. Not that every test probably worked out to the positive, but vast majority have. And so the most consistent strategy in VectorVest right now, along with a $10 minimum and 500,000 average volume, was Smooth Comfort. And in the Jockey Club, on the morning of June the 5th, we saw that using all the way up to June 4th's data, that Smooth Comfort was the strongest strategy by the filtering that we have here, and we decided to go with that one, accordingly, according to the fact that it had been the most persistent. So when I click on one of these green bars, incidentally, you can see like all the testing. There's going to be 67 tests in here, and they're going to be varying the start date for each one, simulating buying a basket of 10 stocks and holding them all the way to current. We're varying the start date. So you got a 613 to 614, 614 or 314 to 614, 315 to 614, 318. And in a lot of those tests, there's going to be a lot of different stocks. And so what it does is it looks for how consistently is Smooth Comfort picking winners. It's not that all 10 are different each test. In fact, there's probably some overlap, but as you go through time and go through 66 days, there's going to be some turnover. So how consistently has Smooth Comfort picked winners? And, we do some other things, but that's the emphasis of, that's the 30,000 foot view of what we're trying to accomplish. And this was one of the elements of how we were able to pick Smooth Comfort. It's been the most consistent search in the platform. In terms of what could that do for you, a lot like listening to the special presentation in Patrick, line your pockets with safety and comfort and buy those kinds of stocks, as the market took off, you could get the information from the Derby saying Smooth Comfort would be a good choice. And the thing about Smooth Comfort, it's also a very, very much keyed in on price growth persistence, hence the name Smooth Comfort. And it's been a good direction to go. For example, if I go to RoboTrader, in here, this is a graphical representation of the performance of our portfolio. This is live, real dollars. It's not a back test, and you'll see we started buying stocks on 6.5. We got a couple of big winners in there now. We already put one in the bank with AYX, I think it was. And so far, so good. We're using Profit Locker. If I come up here to reports, trade history, we've had a few small losers, one big winner. So Profit Locker's doing its job. AYX has been carrying all the trading that have been round trips so far, but as we look at what's in the portfolio, tremendous performance there, 5.82% so far, 0.3 today, which has been a really tough day, right? And that's kind of the continuing theme here. The market has been selective, and if you're going after the smooth sailing, high flying stocks, those have been the ones that have really been participating the most. That's really the main thing I wanted to get across, okay, is no matter whether you go after them with the high CI, the RS times CI, the Midas Touch list, or are fortunate enough to have the Derby and could have found Smooth Comfort and done well, VectorVest can point you the right way to find these persistent climbers, and those are the kind of stocks I would keep my eye on, at least for now, until that buy to sell ratio really starts to kick into gear. And quite frankly, it's not a bad way to go in general. So hopefully you found value in today's presentation. It's time for me to wrap things up. I just want to thank everybody for attending this week. We'll see you right back here next week at VectorVest University. And if the Derby caught your eye and it's something of interest along with the coaching, again, there is a link to where you can take out a trial to that product. And just love to have you in the Jockey Club, be able to get a chance to coach you up. All right, guys, we'll see you next week right here at VectorVest University. Talk to you then.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.